My name is Phil Balknight, and I am the moderator. Like we were just introduced, this is Trevor, this is Hamiz, and we want to talk to you guys today about the rise of DAOs, DeFi, and tokenization. But the important part is that it provides use cases. And so, thinking about it over, let's say, like the last 2 years, right? Crypto has and blockchain has really kind of jumped into the mainstream attention, right? We've seen it on SNL, we've seen it at the Super Bowl, right? I don't know about you, my grandmother's asked me about Bitcoin. She's like, Phil, you okay right now? And so there's been a lot of mainstream attention, but most of the attention up to date has been related to the financial aspect, right? We talk about number go up to the moon, getting wrecked, everything in between.
Certainly.
But that's really just a small portion and subset of what cryptocurrency and blockchain technology can provide to people. And so what we think is that what's going to take mass adoption from where it is now to where we believe it's going is use cases, right? You need to find use cases that make crypto easier to use, that removes the friction, and that brings back the fact that crypto, when you're not, just looking at the price, it can be fun.
Certainly.
It can be fun. And so, with that being said, I just want to jump right into a discussion. And one of the things that we've been hearing a lot about is DAOs. And I don't know if Trevor, you want to take the lead and just explain what is a DAO generally.
Yeah, I mean, the easiest way I describe it, is, and kind of cheeky way I describe it is a DAO is a group chat with a balance sheet. Effectively, if you and a bunch of peers had some assets you could allocate however you'd like. The kind of key defining factor for most of the early DAOs was the kind of democratic governance model. If you have an organization you're a part of now, it's probably kind of more of a tyrannical org. My 9 to 5 is running a startup that was recently acquired, and I'm the dictator in that org. I set the roadmap and we go accordingly. In a DAO, oftentimes you have a token, a crypto token, and you use those tokens to vote on proposals that people in the community are making. So folks have described it like a co-op on chain.
And so what would be the difference between that and a typical governance structure if you are one of the members of the token holders?
Well, one of the things I really love about DAOs is you kind of get to speed run and create these little petri dishes of lots of different governance models. Some of them early on allow people to accumulate lots of tokens. So instead of one user, one vote, if you were really wealthy, you could acquire tons of tokens and sway, the government decisions in your favor. Others have explored with, one wallet, one vote, no matter how many tokens you have. And then obviously in our everyday kind of Web 2 trad models, they're traditionally kind of governed by a leadership team, a CEO, a board, and then you have the kind of minions seeing through those visions. So in this kind of newer DAO model, in this more egalitarian model, ideas are flowing up from the bottom, being voted on by the community, and moving forward accordingly.
So it's more of a horizontal governance model more than a vertical one?
Yeah, and I want to flag that there are lots of different ways to do these things. Like I said, there are lots of different petri dishes kind of being explored right now that integrate different ways of building consensus.
Okay. And so, Hassan, when we're talking about use cases and adoption, I know this is something that you really focus on a lot. Since maybe, I know, June, there's been quite a drop in the prices of crypto, right? When you're talking about adoption, is that something that you look at the prices, or is that not really the issue, and you're looking at something else to see what's going to get us to the next step?
Yeah, absolutely. So we've been in this space and investing in it since about 2017. This is not the first time we've seen a 50% drop in prices. And so what we really figured out over the years was that there was rhyme and reason to what was happening if you looked at where the users were going. But if you were staring at the price charts every day, they didn't give you much information. It was all just sentiment driven, go up, go down, go sideways. The newest sentiment driver is macro factors, but a couple of years ago it was something else. And so what we've really spent a lot of time on is taking millions of data points and understanding where the users are going. Because at the end of the day, all of this discussion and all the interest in this space will be worth nothing if we don't get product market fit, if we don't get actual users using this in their everyday lives. And so what we've seen across the board is a lot of the entertainment use cases do get initial traction, but only when there's a really heavily incentivized model where there's a get rich quick kind of feeling and there's FOMO involved with it. But after that initial excitement goes away, most of these platforms do not actually retain their users.
Right.
And so you will actually have some metaverse on the blockchain with $1 billion valuation, and they won't even have 100 active users. And there's just no way to justify that valuation, right? Like you don't have to be a sophisticated investor to realize that that's ridiculous, right? And so we are seeing a lot of adoption in the financial use cases, as we have already talked about, but there are particular non-financial use cases where there's actually millions of active users. Some of those revolve around advertising, some of those revolve around health, and there's very few names out of the 10,000, maybe about 100, that have any real adoption that can be measured and tracked over time.
And so when thinking about adoption, the way when I look at it, it's that you really need like a killer use case, right? Something that's going to make things easier than what you're doing right now. We look at, 10, 15 years ago, e-commerce was very, very scary. People were very afraid to put their credit card on the internet. Never, And now we do it all the time.
Yeah.
And so trying to find something that'll make this process easier and that'll take some of that friction away in whatever that use case is, and it may not exist yet. And so my question to you, to either of you, is, and maybe we can start with DAOs. What are some of the actual use cases that you're seeing for DAOs that are either making things easier or making things more fun for the average person? Because when I look at it, the average person doesn't really care or understand if Bitcoin is digital gold or Ethereum is an internet bond or any of that. They want something that makes their life easier on a day-to-day basis. And so I'm curious what you guys.
Yeah, it's funny. I always think, whenever I hear this question, I always think about an old David Letterman episode when Bill Gates is on and he's trying to explain the internet to David,
yeah.
And he's asking, what can I do with the internet? And Bill Gates is like, well, you could listen to a baseball game on the internet. And he's like, ever heard of the radio? And everyone kind of laughs. And then Bill is like, well, no, you could also kind of you could save that audio and you could listen to it whenever you want. And Letterman's like, ever heard of a tape recorder? And I think a lot of the things that DAOs enable are things that currently exist in the real world, but they do them in ways where either more of the value is flowing to the edges of the network, people that are actually creating that value, or they're doing them in ways where they can capture value that otherwise was leaking out to other places. And so I get really excited. For a long time, I was a recording artist, a music producer, and any of you who've been in the culture industry for the last 20 years have seen a lot of that value slide away and a lot of it be captured by places like TikTok or Instagram or these more centralized networks. Some of the things that I've seen our DAO members get really excited about is the ability to kind of create ownership and then allocate ownership in different assets, cultural assets, to the people that actually created that value. We've seen a lot of that excitement in NFTs with visual images. I think the ability to create a network, I created a DAO called Friends with Benefits as this really cheeky way of showing that if you're creating community, if you're creating compelling content via a chat room or whatever it is, and that value would otherwise be allocated or kind of reallocated to Mark Zuckerberg or early investors in Facebook, you could create a private chat room, tokenize it, and see the kind of value that you created in the tokens that you're holding. And so I often think about things like, if you go to different neighborhoods that are gentrified, oftentimes they're because of creative people. You go to Silver Lake or Williamsburg or Oakland or whatever it is, but because there were no good instruments to capture that value accrued to the people that own property in that space. And so the big thing I think young people, creative people are getting excited about is that there are ways to create instruments that can capture value that was otherwise ethereal and then have that attributed to the people that were creating it.
Okay. And so just talk a little bit more about the Friends with Benefits concept. And so you have the tokens, and is one of the other benefits too that you've created, because humans are tribal by nature, right? There's this community aspect, and so if you have the token, does that also provide opportunities for you to collaborate and achieve objectives together? But also, let's say you have a token, and then someone else who let's say, I don't know, Jay-Z or somebody has a token. If you have enough tokens, maybe you're all in the same place and you get access to be able to pick the brains and coordinate with people that you wouldn't otherwise meet.
Yeah, certainly. I mean, it's some of the same reason people would pay to come to an event like this, right? You want access to people, you want to be able to pick their brains, you want to be able to hear good ideas. But beyond that, I think that there's so much more to getting together. Folks have come together and kind of taken the pooled resources and created energy drinks. They've thrown live events. They've built software that kind of the entire crypto space uses now, stuff like Gatekeeper. And so the opportunities are kind of endless. What it's about, I think, is giving a generation of young people who otherwise had all this kind of a nihilism and malaise, and taking all that latent energy and pointing it to a place where they have real ownership and they see some upward mobility. I think a lot of the interest in crypto to older folks doesn't make sense because they had mobility in their lives that otherwise has been lacking for young folks. So the ability to either roll the dice and buy a monkey JPEG and maybe have the ability to buy a home seems crazy, but the options otherwise are pretty bleak. And so I think when you see stuff like DAOs and NFTs and other things gaining mind share, it's because people are looking for opportunities to better their realities, and these are some of the few spaces that have design space, that has white space for innovation.
Okay. And so talking about bettering reality, a little bit about Web3 I want to ask you about in terms of, the concept of using Web3 and social tokens to, again, capture more value for yourself, which would be taken or derived from like a big tech platform or something through the ad revenue. And Hassan, if you could just tell me a little bit about your thoughts on that.
Yeah, absolutely. So I think it's actually one of the examples that we've seen is in the advertising model. And I think it's very interesting because if you think about the business model that was the most successful over the last 20 years, it was essentially selling people's data to make money. Facebook, Google, YouTube, you name it, they all have the same business model. And I actually think as a group, it's quite disappointing that after 20, 30 years of innovation, the only business model we could come up with is sell people's data to make money, right? And it would be really disappointing if that's what we did moving forward as well. And so we have examples of companies like the Brave browser, which have 30 million plus users and and tens of millions of downloads that are essentially creating a ad share revenue model where every time you give your attention to one of their ads, you actually get paid a portion of the value you create. But in the case of Google, when you give your attention to their ads, you get none of that value over time. And so these are not financial use cases, and they're only possible within blockchain because it's possible for you to have micro payments down to a fraction of a cent happen instantaneously and happen for basically no money. And if you really think about micropayments as one of the use cases, it opens up entirely new business models that were just not possible before. Like one of the ones I came across a couple of days ago, which was very interesting, was that instead of getting paid at the end of the month, why don't you get paid every minute of the time that you're putting in and you're accruing that balance? And that's all possible if micropayments become cheap, fast, and easy. You should be accruing your pay every minute and get paid every minute, and it should just be dropping in your account, right? And that's not possible on Visa's network. That's not possible on the Chase network. That's only really possible when you scale their technology and make it that accessible. But at the end of the day, all of this might seem like there's no rhyme or reason to it, but I promise you, even to the most traditional fundamental investors, we can all agree that as long as there's more usage of the platforms, there's value here, right? If I told you there was a platform with 50 million daily active users, you would take it way more seriously than you take any of the blockchain platforms because you think of them as toys, right? But 50 million active users is not a toy. That's a real application. And so I promise you that if you look at the adoption numbers, this can make sense to everybody. It's not just for young people who are trying to make a quick buck. There are real people around the world which have use cases that we might not understand because we don't have the same problems that they have. But there's real use cases around the world with tens of millions of users actively using the platforms. And that is what drives value over time. It's not just going to be the excitement or the vision or the concept of these things. At the end of the day, we will have to somehow reconcile the fundamental value that this provides to people to the value of these platforms. Because if this is not useful to people, this is all for nothing. Right? So at the end of the day, it has to improve people's lives. And you can see if it's doing that by looking at how many people continue to use the platforms and continue to come back.
And so talking about things that impact everybody, one thing that impacts everybody here is our health, right? We all want to take care of ourselves. We all want to live long. We all invariably have to go to the doctor at some point. And there's been developments with blockchain technology for use cases, and you and I talked about this before about health applications and things of that nature. And if you just talk about that a little bit.
Yeah, there's not one, but multiple of these health applications. When I first saw them, I was very skeptical myself. It was essentially for walking, you were getting paid tokens. And that kind of seemed like a toy to me, right? Like, didn't really seem like a serious use case. But when I started looking at the number of users, which is what I spent all my time on, it was probably the fastest growing, biggest network of blockchain users I've ever seen. And they had tens of millions of users actively using these platforms, and they had stupid names like Sweatcoin and things like that, right? But there were real users all around the world, and my first gut reaction was they must be faking their users. That's how ridiculous it sounded to me. But then I talked to people in China, I talked to people in Pakistan where I grew up, I talked to people in the US that there's actual users using these platforms. And it's a very simple concept. It's you walk more and they encourage you to walk more and then you get paid for that. But the reason they're able to pay you for that is because that information is extremely valuable to health insurance companies and health companies, which I'm not the biggest fan of because we kind of go back to the model of selling our data for a return. But it shows that there are actual users for these types of weird use cases that have nothing to do with finance. And the particular company that I'm thinking of right now has about 50 million downloads and about 10 million active users right now, which is probably the top 10 in any blockchain application use case out there.
And so over the last 2 years, I would say one of the things that's really spurred adoption is, would you agree, is NFTs?
Certainly, absolutely.
And so I want to talk about that and how they can provide a variety of use cases and a variety of injuries. But can you just explain to the audience what NFTs are?
Yeah, I'm sure most folks have seen NFTs popularized through Bored Ape, Yacht Club, or other things. You know, a non-fungible token effectively is a file that is individually ownable and universally accessible on chain. I think that individually ownable piece and that universally accessible thing is often quite slept on, but that's the real magic trick to me. Again, as someone who was an artist for a very long time, I was in a rap group that put out a top 10 album in 2008, and we saw like the last gasp of the music industry. And I knew a time when people would make a song, sell CDs, and make a living. And when the internet came out and proliferated Napster and other kind of download services, you saw that as scarcity decreased for this music, as it was abundant, the value of that music seemingly went away. And the dream was always, for someone like myself, that you could have your music touch everyone because information wants to be free. I believe that. But you could also make a living so you could continue to pursue your craft. And they seem like they lived at odds with each other for a very long time until NFTs did this little magic trick that I kind of best describe with the Mona Lisa. The Mona Lisa is this really novel thing to me because it's an image that we all see everywhere, on t-shirts, in textbooks, whatever it is. And the more popular that image is, the less scarce it is, the more valuable it became, right? It's this priceless image. Why? Because it's a source of truth. Everyone knows that seeing a Mona Lisa in a textbook is not the Mona Lisa. The Mona Lisa is in the Louvre, right? And so what the blockchain is to me and what NFTs solve for is they create this Louvre for all assets. And so when you see a Bored Ape on Twitter, on Instagram, you know that isn't the Bored Ape, it's a reproduction, the same way you know it's not the Bored Ape, or not the Mona Lisa in a textbook or on a t-shirt. And so what that enables is for artists to both create media that anyone can access. Anyone can right-click, save a Bored Ape, we get it. Anyone can create a video, a song, whatever, mint it on chain as an NFT, and you can listen to it. But a super fan or someone who wants to speculate on that object can go collect that thing. And it can also be individually ownable. And that is what enables all of this really exciting stuff.
So let's break that down a little bit more. When talking about NFTs and the benefits it can provide for artists, creators, can you talk a little bit, both of you, about how you can utilize smart contracts with NFTs to provide a revenue stream for for users, right? It creates an ability to earn income, do what you want, without having to have the stuff taken from distribution or things of that nature. And so,
Yeah, and so one of the funny stories about NFTs is last year we got pitched this game, and when we said, okay, we like what you guys are doing, how do we get involved? They said, well, you could buy some spaceships from us. And I said, okay, how much are the spaceships? Well, they're $10 million for 3. a pack of 3. And I just wanted to make sure with the guy, you're talking about real spaceships or you're talking about NFT spaceships? And he confirmed that they were NFT spaceships that they were willing to sell to us for $10 million. So that game, specific game, has lost 99% of their users. Those spaceships don't sell for anything today. And the truth is that beyond much of the speculation on the price of the NFTs, these platforms have not been able to get real usage. And if you look at OpenSea, you look at any of these platforms, their volumes are down 90% plus. And when there is any sort of volume that's from some new mint that's happening and people are trying to get rich again. There's an interesting concept that recently came up called soul-bound tokens, which essentially means that once you buy that asset, you can never sell it. It's from World of Warcraft. When you pick up a special item, you are the only one that can ever own that item. And so the way to test whether NFTs are a real use case is to make them soul-bound, because then there's no reason for you to buy them to flip them to somebody else. And if I see millions of users having soul-bound NFTs that they cannot sell, that's when I'll be convinced that this is a real use case. Because right now, for the most part, when I speak to people that do anything in NFTs, it's I'll buy it for 100 and I'll sell it for 1,000. And that's pretty much the start to the finish of their motivation to be involved. Now, that doesn't mean everybody's like that, but that's, from my impression so far, the majority of people. And so the NFT use case is interesting. We started investing in it in 2018. The reason we stopped investing in it was not because we lacked the imagination or lacked the interest in the use case. It was because there were just not enough users. And you would, again, have $1 billion NFT platform with 100 active users. And there is no world where you can justify that, even if it's a virtual metaverse, right? You can't justify those valuations. It doesn't make sense. So a lot of these users are a flash in the pan. They come in and they go, and it's a get-rich-quick scheme. And it is not, from my perspective so far, a sustainable use case.
Can I push back? I agree with him, but I'll give kind of a...
Please.
Yeah, I think it's just like healthy for the discussion. I'm trying to think of the best way to frame it without being too academic. But I mean, whatever. So there's like Marxist logic in assets. There's kind of...
Just do it, man. There you go.
Yeah, use value, right, and exchange value. There's like, I wear these shoes because they provide utility, use value. There's exchange value. These shoes don't fit me, but I think I could trade them to someone who does need them. And then there's kind of like more postmodern, like Baudrillard, sign value, right? That they're objects that have brands or have value because of what they signify culturally or otherwise. And I think as more and more value moves from what I would call meat space, our physical lives, to our virtual lives, you really see an emphasis on sign value. And so much the same way that like luxury brands exist because of what they communicate, not because of the utility they serve or even their exchange value necessarily, the idea that we're going to have these wallets that travel with us for our entire lives potentially, and that instead of logging in as we do currently to a bunch of different social networks and providing a bio and a photo, that will be populated by all of our interactions online. That if I had an NFT from Future Proof, and in 10 years this is Coachella and being here has all of this kind of like cultural clout, maybe that gets me a job, maybe that gets me a date, maybe that gets me other things, right? And so this idea that I would buy a stupid spaceship and that spaceship becomes like the Rolex of this space, even if it's purely speculative, if that does become this desirable asset only because of sign value, not because of utility, not because of exchange value, then I think there's an asymmetric bet you could make that isn't totally asinine. But you could go and buy a Bored Ape because it will become a Rolex or, I don't know, a very rare sneaker. I'm not really a sneaker person, but yeah. I think there is an argument that it's asymmetric and a bet worth making.
So for that example, like we kind of deal with this now, even if you have Fortnite or something like that, where you have the skins and they don't do anything, right? They don't.
Yeah, and I think the pushback I would give is we live in digital environments where all of us had like sick MySpace accounts or Vine pages, and this idea that like digital media would have persistence, it seems like a myth. But this idea that we have networks now that are going to be maintained by hundreds of thousands of people globally means that we could be using Ethereum or Flow blockchain, well beyond our lives. And so what that enables, in my opinion, is for us to speculate on digital assets the way folks have in physical assets. My best friend is a curator and has his own gallery, and oftentimes folks are buying physical art assets with this idea that this artist may be misunderstood in their lives, but long after they pass, that speculative upside will be met. And I don't think we treat digital assets that way because they've been born in an attention economy where if your Netflix show doesn't hit now, if your Instagram post doesn't hit now, it effectively has no value. And so changing the kind of the time horizon on our speculation on digital assets, to me, provides an asymmetry that I think allows people, like myself in some cases, to make seemingly silly bets on JPEGs.
Yeah.
And do you guys think that one of the challenges with the keep maintaining the value of NFTs or speculating on them from a use case perspective is like the challenge of interoperability, right? Because if we're in the metaverse or we're on different blockchains, if I'm on this blockchain, but I want to then bring my skins to that blockchain in that blockverse, how do I do that? But also, how do I do that if I'm on a decentralized blockchain versus Ethereum, but everyone's having a party in Decentraland?
Yeah. Yeah, I don't think that like just the composability between blockchains would suddenly make those spaceships worth $10 million, right? Like to me, that still doesn't cut it. Now, having said all of this, I might sound like a skeptic, right? I'm not a skeptic. I've dedicated my life to understanding where the adoption is happening in this space. I'm not a skeptic. I'm just trying to be realistic about what's here, right? I wanted so bad since 2018 for these use cases to catch up. I wanted so bad because I was an investor in them. I wanted these to work out. But we have to be honest that they're not working out. We have to be honest that this is mainly being driven by speculation, right? And that is not a sustainable use case. Speculation on its own is not a sustainable use case. And so I am not a Bitcoin maximalist. I'm not an Ethereum maximalist. I'm an adoption maximalist. You show me the users, and I'm excited about it. You show me the growth in users, and I'm excited about it. But no matter how composable we make this game to 50 other metaverses, those spaceships are not worth $10 million, right? Like that doesn't change the fact. Now, if that game had 100 million users, yes, those spaceships could be worth $10 million. But just making cool technology move around doesn't give it value because cool technology is inherently worthless. It is only useful technology that has any worth.
So one area where I have seen, and we've talked about it as well, where there has been uses, and it's something that's pretty ubiquitous, right? We all kind of a lot of people pay attention. Is sports, right? We all like sports to some, whether it's football, basketball, college. There's a lot of people like sports, and the ability for NFTs to revolutionize sports as a whole, from ticketing to fan ownership to access. There's so many different possibilities, which again, that's fun, and it could be very easy to do, right? You could have a very easy interface to utilize this technology to get a ticket or to have a particular token. So I wonder if maybe you guys we could jump in there because I'm a sports guy, I love sports, and I think that could be a potential area where we're talking about use cases where people could get on board very quickly.
Yeah. I think in the last few years, there's been a few meaningful innovations. I think some of them were in DeFi, automatic market makers. I think NFTs unlocked a whole different group of folks, kind of a more passive user of blockchains. And I think I didn't understand the power and passion of collectibles. I think it makes a lot of sense for folks that were collecting trading cards to want to collect NBA Top Shots, to want to play So Rare and kind of like take fantasy to the next level. So to me, it seems really obvious. I think I'm someone who probably could more connect with the idea of collecting like concert stub tickets. And so even if we're doing at Dapper right now, integration with Ticketmaster, the idea that there is a status games to be played with the concerts that I've gone to, I think enables value. And so I'm super excited about that stuff in sports and entertainment more broadly.
Yeah, I think that the sports use cases have actually seen adoption. We've had some basketball, NFL moments that have been locked into NFTs. I've actually seen real users there. I do see similar amounts of drop off in this bear market. So essentially what happens in all of these bull and bear markets is you're not actually improving the user experience much. All that's happening is the risk of being involved in the crypto space is still just as high. You can lose your wallet, you can lose all your keys, but the opportunity cost becomes so much higher that people jump in anyway. So all that's happening is the opportunity cost is getting higher, people jump in, then the market crashes, the opportunity cost goes down, people leave. The only way we're going to get sustainable user adoption in any of the use cases that we're talking about is if we not just work on making the opportunity cost higher, but we actually work on making the risk and the user experience better. That's how you get sustainable usage of hundreds of millions of users over time. You don't get it by just making it a FOMO machine every 2 years. There's enough FOMO now that even my grandmother's asking me about it, right? But she knows and doesn't feel comfortable being in the ecosystem. And so the biggest service that entrepreneurs in this space can provide is improving the user experience, reducing the risk of being involved. And if you can consistently do that over the years, even without the opportunity cost changing, you're going to have millions of users come into the platforms.
So in that vein, one of the, and I want to pick your brains on this, is dynamic ticketing. Where let's say you have an NFT that provides you a ticket, and you have the ticket and you go to an experience, and then you go to another game and you go to another game, but the ticket upgrades based on the technology to give you, it keeps track of it. So then maybe you get access to, we're in California, you get access to a Lakers game, and the more games you go to, you get access to a front row seat, and the more games you go to, maybe you get access to Kawhi Leonard or somebody like that. And to me, is that something that could potentially, you see, again, now we're talking, it increases the experience of the fan. And there's so many people who go to sports. Do you think that's something that could maybe move the ball a little bit?
I think I'm so traumatized from like so many cycles in crypto, tying things off chain to things on chain, that like I think the stuff you're talking about there gets exciting to me is maybe kind of taking what's currently exists in airline miles or frequent hotel stay points and creating liquid markets for them outside of these kind of centralized models. Where I get excited about stuff like that is, I was talking to a friend last night about like English as this kind of global reserve language, almost like a reserve currency. And that when I'm in Europe, I'm going to be anywhere and I'm like, people can speak a little bit of English. That's been very exciting for me as a traveler. I think there's a future, right, where you can imagine technology enabling an earpiece that would effectively allow you to talk and it immediately translate into someone else's language. There becomes no more need for like a global reserve language. Much in the same way, I think there's a future where maybe we don't need a global reserve currency in dollars. We effectively have like pricing oracles that can say right now your status from going to LA Rams games is worth X, and that you could trade that for a burrito right now worth Y, and there are these kind of dynamic price feeds that remove these needs for like global reserve currency. So I think where like blockchains get sexy to me is that this ability to kind of do really cool stuff on chain to create like pricing oracle, other ways of pricing goods, largely digital goods that can be exchanged in real time for like physical value. But yeah, I don't know. I think, do you have any opinions on like premium experiences from going to physical stuff?
So that use case usually is like tough for me to really grasp. We used to pitch, fan token kind of concept where if Taylor Swift said, you could be a super fan, you could buy 100. There's 100 of these super fan tokens. If you buy them, you get front row seats at my concerts, and I meet you backstage, for every one of my concerts. That super fan token would inherently have value. Where I struggle is how that would be any different than doing it on a traditional database. That's like the first question you have to ask. Every single time I invest in one of these companies, it's, can this be done with the traditional database? And the truth is, from the 10,000 companies out there, 9,900 of those can be done with the traditional database. That's as simple as it is. Those are faster, cheaper, and easier today. The way you solve that problem is you have to come up with products that are 100x better, 100x faster, 100x cheaper. And if you cannot do that, you're not going to break the cycles. You're not going to break the habits. And so the truth is, I'm disappointed that out of the 10,000, there's 10,000 good ideas, but there's not 10,000 better products. They have to be 100x better products to get any meaningful adoption. And for a lot of these use cases that even I imagined and had hoped for, I actually don't see why them being on a blockchain makes 100x of a difference. It might make 2x of a difference or 5x of a difference, but it doesn't make 100x of a difference. And so it will be hard for me to explain to my mother why she needs to download a crypto wallet and now she has an address, unless it's 100x better. If it's 100x better, she's not going to care. She's going to do it anyway. Right? So I think there's a bar, and people are not meeting that bar with their products. They have to aim for 100x for us to have any chance against Google, Facebook, and the likes.
So we're at a financial festival, the world's largest and first financial festival. So clap for that first, right? All right. So one of the things we're not talking about the financial aspect of number go up or getting wrecked, but in terms of finance, is there an area of finance that you guys see that is most likely to adopt blockchain technology for what it's trying to accomplish?
I should probably let you. I think what's fun of being up here is I'm remembering the kind of like founder naivety versus like investor pragmatism. I actually really do. I think, for me, I think speculation is a killer use case. People are always like, what's blockchain's killer use case? And I think speculation is clearly one of them. I think the idea that we have this kind of like global issue of immobility amongst a lot of folks, especially people, and it means that this is something that can be really special. I think a generation of young people that were part of the Occupy movements or kind of been really hostile to big tech and big finance are intrigued by crypto because it levels the playing field. At first they were like, fuck Goldman Sachs having all the nukes, and they were like, we hate nukes, and they're like, wait, well, we all had nukes, then maybe I could out trade a Goldman Sachs analyst at like cat JPEGs because I understand jokes and memes better than that person does, and so I know how to trade Doge because it's not a financial asset, it's a meme, it's a joke. And so I actually think there's all kinds of cool stuff outside of core finance that will gain a lot of headway. I think being able to speculate on handbag futures is probably more interesting for a lot of my friends than wheat or whatever it is. But I'd be curious what the pros think.
Well, you're not gonna like this. Okay, so name one billionaire that made their money day trading JPEGs or any pink sheet stocks. There's not one billionaire that's like that. But you can name hundreds of billionaires that made their money by creating a 100x better product. If you want the disenfranchised people to create wealth, well, you should ask them and support them and fund them to make 100x better products. They do that in the blockchain space, and that's how they become they change their situations. They will never change their situations trading things on a daily basis. There are not people, that's not a consistent strategy, right? To create value and create wealth. And so I'm sorry, but I knew you wouldn't like this one, right? But
That's great.
I think that speculation from the perspective of like building products and speculating on yourself
Sure.
to build a better future and a better solution, that is actually sustainable. And that's actually how you create long-term value. And I think if we said that that's what we're encouraging in the blockchain space, I think everybody here, regardless of how skeptical you are, would say, you know what, that's a good goal. How about you go do that, put another 10,000 entrepreneurs to work, and even if one of them creates a 100x better product, you're going to have another Amazon. That's, I think, the right way to approach this. And I'm all ears to back 10,000 of those entrepreneurs if I can, right? To really make this a long-term solution. And so in the financial use cases, I'm sure most of you have heard of DeFi. If your business can be codified in if-then statements, and if it can be delivered digitally, it will not survive the next 10 years. That's full stop, period. There's no other way about it. And so if you start thinking through the services that you use today and start thinking which of these can be codified in if-then statements and which of these can be delivered digitally, you can start making a list of companies that will not survive the next 10 years. And that actually has nothing to do with blockchain. That will happen from software companies on its own, regardless of whether blockchain becomes this neutral infrastructure. Now, I believe that blockchain is going to be a very important part of that infrastructure because it's neutral, it's safe, and it's shared, and it's a better database to build these applications. But as long as those two requirements are met, if-then statements and a digital platform, you will not survive the next 10 years. And so if you think about banks, you think about mortgages, you think about a lot of these platforms, just think from those two perspectives. If they meet those criteria, go out and build it because that is inevitably the future.
So, next question is, when thinking about blockchains, there's kind of I see two big schools of thought, right? There's one that use cases adoption is an all or nothing kind of proposition, and there's somewhere it's blockchain use cases will be just another option. And I'm curious about your thoughts on where you fall on that spectrum.
Well, I mean, quickly to poke back. I know. I think what's interesting is that we live in a moment of accelerating returns, and I think because of globalization and because zero marginal cost reproduction, like we see, huge amounts of wealth being created quite quickly. And I would say, like, I have a bunch of Bitcoin friends that are billionaires, so I'm speculating on highly volatile assets for the last 7 years. That said, I think clearly the answer is going to be both to your question, right? I think we're going to need like really killer use cases. I think it's still quite silly that very early on in the internet, I could say like, what's better about the internet? Oh, like you write a letter and you send it and it takes 2 days. I can send grandma an email and it gets to her right away. That's very clear and I think to the point. I think for the Western world, a lot of the real value add right here isn't totally clear. I have friends in Russia who had their wealth effectively go to zero and had to repatriate it to the U.S. by like converting it to crypto, sending it, and then creating an account in the States and pulling it into their U.S. accounts. And so I think there's going to be both of them. We have like 40 seconds left if you want to punch in as well.
Sure. Yeah.
Oh wow. Okay. So last thing. Tell me what you're most excited about as it relates to use cases over the next 5 years.
Oh, I mean, first of all, I love bear markets. I love when all the grifters go away and all like the former CBD salesmen, like nightclub promoters, start doing other things. But I think the things that I'm probably most excited about are some of the interesting experiments on different layer ones. I think we're going to have clearly a multi-chain or kind of cross-chain future, and there's lots of really interesting experiments that folks are exploring in bridging, which is still really hard, and I think also in building layer ones and app chains that are specific to different use cases that will enable some of the behaviors he's talking about.
Yeah, absolutely. I think layer ones and the scalability solutions are the most important. They're necessary for us to go to the next stage. And a lot of people think about the total addressable market of layer one solutions, and they will always fall short. Because when you think about the impact of technology on the economy, it's not just the money that it made people in the stock market. It changed every aspect of our lives. And so the total addressable market of the internet is everything. And the same way, the total addressable market of layer one blockchains that are scalable is everything.
Well, thank you so much for attending. We're out of time, guys, and we appreciate it. Hope you enjoyed it.